More than 224,000 people have contracted
13 people
the virus,
have died
including
from the virus.
140.
These are unprecedented times.
World leaders
These
to
are the
hold this
coronavirus
emergency.
developments this Saturday morning.
Responding to coronavirus.
The IMF has forecasted a 6.7% contraction in the economy, which is quite substantial. After a long time, Australia would see a contraction. Now, there are also forecasts from, say, UBS, which is suggesting that there will be a deficit of around $300 billion, or 16% of national income, which is again a fundamental change from what we had heard from Treasurer earlier this year, where they wanted to return surplus in current year and the subsequent year.
If we end up going into a recession, and there's a fairly good chance that we will be, and there is also more than likely we're going to end up in a global recession, where is the demand going to come from? You can create projects, but you've still got to have a demand level on the other end. But the unemployment is probably going to be our biggest factor. Unemployment is going to hit somewhere around the 10% mark. That's the highest since probably the early 90s here in Australia, when we were in the last recession and we saw property get quite severely impacted back then.
Will it be U-shaped or V-shaped? And it occurred to me it'd be more like the VW logo. So there'll be aspects of our economy that will be like a V, but there'll be other aspects where it will go into decline and it will be difficult to recover. It is very difficult to create a job. It's difficult to create the trust, the confidence in investment, particularly when capital's short and demand is desultory. The issue for the industry, I think, is that there will be very limited capital, so there won't be much money for investment, and there'll be potentially quite limited or reduced demand.
And these reasons are not related to, say, people are not able to inspect property or attend auctions, but rather the economy in general. Unemployment rates have risen, the lending risk has increased, and there is also some credit tightening in the market.
The property market and everyone who owns and rents at the moment is just trying to hold on. Everyone's banking on, okay, we'll be back to normal soon, everything's going to take off again. But that can only happen, the rent holds and deferments and mortgage deferments and all that can only last so long.
If we look at the population growth of Melbourne per annum, at the moment, each year Melbourne's increasing by about 115,000 people a year, according to ID Consulting, of which approximately 40,000 is just from natural growth, and a very small proportion of internal migration, people coming from other places. And the rest, 75,000, is from overseas immigration. And they are obviously, that proportion is a big driver of demand.
What we have is a massive lack of demand, and probably going forward, this is what is going to probably generate a bit of a shift downwards into a bit of a housing crisis, in essence, in the market, because without the levels of immigration from interstate and also internationally, the high levels of unemployment we're anticipating over the next 6 to 12 months, the property market is probably going to, the bubble is effectively going to burst without this demand factors kind of driving the sector.
Inner city housing market in Melbourne is heavily dependent on students from overseas. Now we have seen the vacancy levels have risen.
I would say we are going to see market declines. I mean, the CommBank has come out and is anticipating that our property market is going to drop by somewhere in the order of 30%. Some of the other banks weren't so pessimistic, and they were, talking 10 to 20%, but that's still a significant drop.
Working from home or working remotely, supported by the changes in technology that we've experienced over the last a few years is quite possible. It's slower, clunkier, but it does work.
First, people have tasted working from home, and it's likely, like many employers are also thinking, whether this model will continue in the future as well, where we will see much more flexibility in terms of working or the way people work. There was already a trend towards remote working that seems to become much more pronounced in coming future.
The recession of the 90s, what happened then was that people did recalibrate. They rethought their place in the property industry. By the end of the 80s, there was no money and nobody wanted to occupy an office.
Well, this year and into 2021, we are having some of the most significant amounts of supply coming onto the market that we've had since probably the late 80s, early 90s. All the forecasts last year were anticipating that Melbourne rents for commercial property would be increasing quite considerably over the next few years. And so this has also helped spur a lot of the development. However, with the economic downturn, contraction of businesses going bust, and also the return to office work and the changes in patterns in terms of people can now invariably work from home with the technology and things like that. There will be concerns about coming into the office and also social distancing in the office. So it's going to change how we utilise the office space and the amount of accommodation that we might need. And so potentially it could be a double whammy for the sector.
The online shopping has increased substantially. So the way we use malls and shopping center, now people will go there to buy their products or to meet and greet or congregate. But the hospitality sector there or leisure would see a phenomenal change. Whether people will go and watch cinema is going to be something that we'll see in the future.
Revive some of the suburban shopping centres. People will work from home or they'll work more often at home. And we are by nature tribal. We like to rub shoulders with our colleagues. And even if you go to a coffee shop and you don't talk to anyone, you just like the fact that you're sitting there reading a book on your computer or whatever it is you're doing, and there's activity around you. Some of those may see some suburban centres becoming more focused and more positive celebrations of the idea of 20-minute neighbourhoods.
How people engage with others in public spaces, like be it markets, theatres, outdoor events, the whole placemaking is going to see a bit of a change. I think we'll come up with innovative ways of getting around this. I mean, the market and the event space has changed significantly over the last 20 to 30 years. I'm sure that they will be able to regenerate and come up with new ideas, but I'm sure we will still focus on trying to get events happening because it is part of the Melbourne culture, the live music scene, the coffee scene, the markets, you mentioned the night market as well. Like all of these things are what we value about our lifestyle in Melbourne.
The things that you're going to be really interested in are going to be education. So you want a decent education system, good health support, and good environment. And if you put physical environment and access, if you put those ingredients together, the infrastructure that goes to support those things then become, I think, the basis of success for your local economy.
I think for sure the government will look at fast-tracking development projects per se to stimulate the economy, stimulate the construction sector and things like that. However, when we think about it from potentially more of a housing direction and things like that, we've also got to think about, well, where is the demand coming from? I'm
particularly not worried about that we may end up creating white elephants because there is already a significant shortages of infrastructure that we see in our cities. And we have been discussing about, say, the expressways being congested or the trains being congested. So there is always a scope for investment in there. I think Australia is far better position compared to many other economies to bounce back. Now, we had relatively controlled impact of pandemic. And if Australia, like there is a relaxation in terms of lockdown, starting in some of the states. So if the businesses come back and if the wheels of credit is rolling, it should be possible to get back on feet fairly quickly and early.
And if you want a long-term role in the next market, if you like, housing market, they're the things you'll be thinking about. Of course, you'll be thinking about cost of production, but if you produce rubbish, I just don't think you don't have a future that's got any meaning. You might make a quick buck out of one building, but very quickly the marketplace will decide that that they're not interested in what you're producing.
We've proven that we can create change in terms of making significant impact by changing our behaviour. And whilst many of us have always said for many years, it's just about behaviour changes, this COVID experience has actually meant that we can see behaviour changes and we have the capacity to actually generate that change.
Mind you, I think that as soon as the pubs open, there'll be a lot of us very happy to go in and meet with our friends and have a chook palmer and a couple of glasses of something and a long chat.